Welcome to Agency Nation Radio, powered by the Big I and Trusted Choice, where we ask insurance professionals to turn on the mic and share successes, challenges, and the stories that made them the professionals they are today. This is an end of year episode of Agency Nation Radio brought to you by the editors of Independent Agent Magazine. I'm your host, Will Jones, and I'm joined by Olivia Overman and Anne-Marie McPherson Spears. Today, we're looking back at 2025 and highlighting the biggest stories that shaped the insurance industry and the independent agency channel. From market predictions and homeowners coverage challenges to cybersecurity breaches, tax reform, and government shutdowns, we'll revisit the headlines that captured your attention and impacted your business. Plus, we'll share insights on what these trends mean for independent agents moving forward. So let's start at the beginning. In January, we started the year with our predictions issue. The cover story was the fifth most read of 2025. So Anne-Marie, what were the predictions and how many of them came to fruition?
Right. So we had four predictions. Investment in AI will accelerate. The industry will adapt to the fact that nowhere is immune from severe weather. The agent distribution model will continue to be profitable and mergers and acquisitions will increase. And lastly, industry financial performance will stabilize. All four were just about right generally. However, while we've made progress on catastrophe risk mitigation, there is still a lot of adaptation that needs to happen to ease severe weather's impact on the insurance market. In August, we actually covered how independent agents are making their communities more resilient to catastrophes, even as cat risks are making property insurance volatility really the new normal. So the agents I talked to emphasized how much more work there is to be done here and how crucial it is for the industry to agree on a set of standards for property mitigation. Also, M&A activity has actually slowed this year so far. There were 520 deals, according to Optus Partners' third quarter report. That's actually a 7% decrease from the same time in 2024. However, we've also seen a continuation of the mega deals trend, including Baldwin Group's purchase of CAC Group for $1 billion and Willis Towers Watson acquisition of Newfront, both just this month. Another prediction we reported on in January was JD Power's prediction that 2025 would be the year of shopping and switching. And this was our seventh most read story of the year. As we got further into 2025, JD Power and TransUnion's third quarter shopping report found that shopping activity for auto and property peaked the second quarter of 2025, up 18% and 9% respectively from the same time in 2024. But we are still at high levels, and as premiums remain high, we are seeing continued strain on customer satisfaction for both auto and homeowners customers.
Okay, so it sounds like a lot of those predictions were right. And I would say, look out for our 2026 predictions article, which will be in the January issue and online in December. So thank you, Anne-Marie. Moving on to February. That month, we posted what was actually our most read story of the year concerning homeowners coverage. Olivia, you wrote how to explain the homeowners market to your clients, and we shared that in our print issue and in the Markets Pulse e-newsletter. What was in the article and why do you think it resonated so much with our audience?
Yeah, so I wrote this article in February of this year, looking back at the 2024 homeowners insurance market, where we saw steep premium hikes, limited carrier options, and rising catastrophe losses. In the article, I looked at a JD Power report that showed us that while clients were shopping more, they were also switching less because there were fewer alternatives, and then carriers tightening underwriting, limited coverage availability, or even exiting high-risk areas altogether. So what we learned and what I conveyed in the article was that clients who understood the reason for the increase were less likely to shop for a new policy than those who did not understand the reason why. And then experts from the larger carriers such as Safeco and Nationwide, they agreed with this. I think this article resonated with readers because it highlighted where agents can cement their role as trusted advisors for their homeowners clients through education. They can save them money and potentially reduce the agency workload of requoting homeowners policies. Looking at 2025, The market remained demanding, with insurers, agents, and homeowners navigating persistent volatility. Carriers continued to tighten underwriting guidelines, reducing capacity in high-risk regions and limiting coverage options, driving more consumers to shop for alternatives. These factors have kept the homeowners market challenging and closely watched. The second article we shared was the fourth most read article of 2025. This article discussed reports from both Nationwide and the Hanover, both established players in the U.S. homeowners insurance market. The Nationwide report, which was called 2025 Homeowners Report, showed that while 63% of homeowners are confident that their insurance policy would meet their needs in the event of a claim, 57% still worried that they would not cover specific damage or incidents. The Hanover report surveyed U.S. homeowners 30 years old and older to assess their knowledge and adoption of risks such as cyber liability, umbrella, valuables, and recreation vehicle insurance. While most insurance said they were aware of these coverages, few actually carried them. The report showed widening homeowners insurance coverage gaps as we experience inflation, extreme weather events, and rising home values. As I mentioned earlier, many homeowners feel confident in their policies, but most still worry about uncovered losses and are adjusting their coverage. Also in the article, we discussed that agents are continuing to promote smart home technology to reduce risks and to err more on the proactive side rather than the reactive side. Nevertheless, major vulnerabilities like adoption of water and electrical monitoring, they remain. And then the Hanover also found that there was low understanding and low uptake of key protections, such as cyber, umbrella, valuables, and RV insurance, underscoring the crucial role that agents have in educating clients and closing these coverage gaps.
Okay, yeah, a lot going on in the homeowners market last year, and I'm sure that'll be the same next year. But yeah, moving on to the spring, after years of hard market conditions and the impact of increasingly costly natural disasters and weather-related losses, March brought the news that the industry had finally returned to profitability. Verisk and the American Property Casualty Insurance Association reported that US P&C insurers recorded an underwriting gain of 24.8 billion in 2024, demonstrating a complete turnaround from the underwriting loss of 21.8 billion recorded in 2023. It was the first full year underwriting gain reported in 4 years. However, as one of our April articles reported, it's worth noting that the underwriting profitability is largely due to higher rates. Specifically, a Market Scout report we published found that personal lines rates rose almost 5% in the first quarter of 2025, with policies for homes valued over 1 million rising by 7.3. Meanwhile, commercial lines rates rose 3%, with excess and commercial auto policies rising the most. But as we head towards the end of the year, commercial rates do appear to be softening. A CIAB report found that the third quarter commercial rates increased by just 1.6%, which was actually the lowest in 32 quarters, driven largely by intense carrier competition. Further, relatively quiet hurricane season is expected to offer rate relief to insureds and insurers alike. I'd say that the general outlook is that we've got sunny skies ahead, but definitely bring an umbrella. And moving on to May, and speaking of umbrellas, our most read story for May and 10th most read for the year was related to dog bite claims. Anne-Marie, you've covered this and a few other canine-related claim stories. What stood out to you about the surge in claim costs, and why do you think this issue keeps resonating with independent agents as we wrap up 2025?
Yeah, stories about dog bite liability always get a lot of attention. 46% of US households own dogs. So I think agents recognize that this is a very common risk. It's a complicated one too, with different states having different standards of liability or even restrictions on what information carriers can use about a dog to limit or deny homeowners coverage. And of course, the dollar amounts involved in dog-related claims are pretty eye-catching. In May, we covered findings from the Insurance Information Institute and State Farm that dog-related injuries cost US insurers $1.6 billion in 2024. And the average cost per claim was just over $69,000, which is an increase of 18% from 2023 and an increase of 86% over the past decade. Frequency is also up, with claims up 19% from 2023 and 48% over the past decade. When I covered this story, Nancy Germond, our Big I Executive Director of Risk Management and Education, explained to me that dog bite cases are difficult to defend, and that's due to many jurisdictions' strict liability standards on dog bite liability, and also that these cases involve some pretty personal and traumatic injuries. In fact, Nancy brought up one example from earlier in the year where a Georgia jury awarded $4.2 million to an elderly woman after she was bitten by a 130-pound mastiff. Stories like these make it all the more important for dog owners to handle their pets responsibly and for agents to perform due diligence with their homeowners clients.
Okay. Yeah, I know. Yeah, Nancy is an excellent expert on those topics. Yeah, moving on to June. After cyber attacks on Erie and Philadelphia, we posted our second most read story of the year. 4 things you should do if your carrier has been hacked. Olivia, what happened with these cyber attacks and what advice did we share with readers after they happened?
On June 7th, Erie Insurance said they detected unusual cyber activity in their operations, but reported steady progress towards restoring operations. 2 days later, on June 9th, the Philadelphia insurance companies also reported their operations were offline, with phones, email, and online services disrupted. Both insurers said they were working nonstop with cybersecurity specialists, but full recovery would take time. These cyber attacks caused significant operational disruption, raising industry-wide concerns about Scattered Spider, which is a hacker group targeting of insurers and putting added pressure on independent agents to manage customers' needs carefully while also minimizing errors and emission risk. The Big I's Nancy Germond cautioned agents that they faced heightened operation and liability risks during these outages and offered 4 pieces of advice. 1, to follow each carrier's instructions. 2, to move coverage whenever necessary and communicate promptly if you cannot place coverage. 3, to document everything. And 4, she warned customers about payment scams since downed payment portals create opportunities for fraud and phishing.
Yes, I remember that one. That was an interesting week for a lot of our readers. But yeah, so moving on to July, 2025 also brought a new administration in the White House, and in turn, we saw federal tax reform passed in Congress. In our third most read story of the year, we shared takeaways from the new tax law known as the One Big Beautiful Bill Act. It represents a sweeping overhaul of US tax policy and makes permanent much of the 2017 Tax Cuts and Jobs Act while enacting new tax policy. Most notably, for many independent insurance agencies, the bill makes permanent the 20% pass-through deduction for qualified business income under Section 199A. According to the 2024 Agency Universe study, 86% of agencies are structured as pass-through entities and are able to take full advantage of the deduction. So great work from the Big I government affairs team there. And then moving on to August, our most read story for that month and the sixth most read story of the year came from one of our Ask an Expert articles. Amory, what is the Ask an Expert service and what was the story that caught the headlines that month?
Ask an Expert is a free service from the Big I Virtual University where Big I members can send in their toughest questions and get responses from VU faculty members. In August, one agent asked how to handle demands to add language to a certificate of insurance. COIs can be a sticky area for agency errors and emissions risk, so it's no surprise that many other agents also wanted to know the answer. This particular agent wrote in about a situation where another insurer was requesting a COI on the agent's client, but was also demanding to be added as an additional insured on the COI, as well as some language to be added about the client's specific locations. And this agent had a feeling that that raised some red flags. And they were right. The VU experts pointed out the big concerns with adding wording to COIs and also provided some feedback on how to practically deal with this pushy carrier.
Yeah, if I had a penny for every COI article we published on our website, I think I would be yeah, very rich man. But if you need any more information about COIs or how to deal with them, I would recommend our listeners visit the Virtual University website or the E&O Happens website. Both of those have webinars and downloads and checklists that can help answer these types of questions. Right. In September, the Big I swore in a new chair, Angela Ripley from Maryland, and the second woman to occupy the position in the Big I's history. The magazine did a Q&A for the cover story, but this month's most read and the ninth most read was about nuclear and thermonuclear verdicts in the commercial auto market. Olivia, you did several interviews on this topic, and you are, abreast of all our markets coverage in our Markets Pulse e-newsletter. What did you learn about nuclear verdicts in general and specifically in the commercial auto market?
Yeah, this is a very interesting topic and also an alarming one for the industry overall. In my article on commercial auto, I discuss the pressures the trucking industry and its insurers are under as they face mounting financial pressure from not only nuclear verdicts, which are jury awards over $10 million, and increasingly from thermonuclear awards over $100 million. Nuclear verdicts totaled $165 million in 2023, and the number of thermonuclear verdicts reached a record 49 cases in 2024. These large verdicts are driven in part by litigation financing, where third-party investors fund lawsuits for a share of the payout, contributing to the broader trend known as social inflation. Social inflation is basically rising insurance costs caused by increased litigation, plaintiff-friendly judgments, and expanding jury awards. For trucking companies, many of which are operating on thin margins, it means they face escalating premiums, operational strain, and the potential exit from the industry. Insurance agents play an important role in helping their clients understand the reasons behind increasing premiums, the role third-party funding and legal system abuse play in increasing cost pressures, along with the importance of risk mitigation and tort reform. The Big I is working with a broad coalition of stakeholders across a variety of industries to educate consumers and legislators about this litigation funding. Additionally, to assist agents, the Big I released the Trusted Choice Legal System Abuse Toolkit, as well as offering other resources to help independent insurance agents educate customers about how the legal system abuse can drive up insurance costs. Statewide, reform efforts are increasing, with about half of the U.S. states considering regulating third-party litigation financing, and states such as Georgia, Kansas, and Oklahoma have enacted rules. Federally, policymakers are exploring higher taxes on third-party litigation funding related income.
Okay, yeah, I know there's been a lot of progress on third-party litigation funding, both on the Big I and our state associations as well. But okay, well, staying in the capital, on October 1st, a partial federal government shutdown began after Congress failed to agree a new funding deal for the 2026 fiscal year, which resulted in a lapse of the National Flood Insurance Program. But after 43 days, Congress finally passed the funding package through a continuing resolution that funds the federal government through January 30th, 2026. The package included a retroactive reauthorization of the NFIP for the period that the program had lapsed, and that is actually the 34th short-term reauthorization of the NFIP just since 2017. And moving on to November, while legislation to curtail third-party litigation funding advanced in Congress, our most read story that month was about personal lines. Anne-Marie, tell us about that story.
So, telematics and usage-based insurance are not new concepts in personal auto, but insurers are actually beginning to expand the use of auto telematics data to inform risk and pricing in other personal lines. So, this story covered Nationwide's recently launched telematics property discount, which connects driving behavior to homeowners policy discounts. For this story, I got to chat with Nationwide's Sarah Jacobs, and she shared some of the research her team has uncovered on how certain customer mindsets and behaviors impact loss performance. The team's hypothesis was that customers who display safe behaviors in driving might also do so in other areas of their lives. And they did, in fact, find that better auto telematics scores go hand in hand with improved homeowners claims. Sarah unpacked how cross-product telematics can improve retention, even as inflation and other factors drive up insurance pricing, and how agents can use these types of products to enhance their classic bundling strategy. As AI increases opportunities to find insights in customer data, telematics can help manage not just the customer's loss performance, but the agency's loss performance as well.
Okay. Well, I'm sure we'll be hearing a lot more about AI underwriting and all types of AI in the year ahead. But that pretty much sums up the year from Independent Agent Magazine. We're recording in mid-December, so we don't know the most read story for this month. But I would say look out for an end of year email and article that will have a list of all the articles we've discussed on the podcast today. But Anne-Marie and Olivia, before I let you go, do you have any predictions for 2026? Anne-Marie, what do you think?
Yeah, we've talked a lot throughout the year about increased AI usage and all the benefits that it brings. But we're also seeing some qualms from agents and customers as we start to see more of the risks of AI play out too. In fact, many agents that I've talked to this year have brought up how they're trying to balance AI tools with the need for connection with customers and also with their employees. I think 2026 will be about figuring out the limits of AI when it comes to regaining ground in customer satisfaction and trust, even as it does continue to help with risk management and pricing. The Big I Agents Council for Technology, or ACT, has a huge amount of resources on how agencies can implement AI without sacrificing that personal touch. That includes a podcast series, webinars, and a resource hub to help agencies evaluate AI tools and vendors. Also, the Trusted Choice AI Toolkit focuses specifically on AI tools and tips for marketing. And the Big I Office of General Counsel published a memo on AI legal issues and acceptable use that actually includes a template of an AI acceptable use policy.
Okay, thank you. Yeah, I know the Big I will be across any developments in AI next year. The president actually issued an executive order this week addressing AI and some of the state regulations. So yeah, stay tuned for any coverage of that. But thanks, Anne-Marie. Then Olivia, what do you foresee as you look into your crystal ball for 2026?
Okay, we can't speak about 2026 without speaking about AI, as Anne-Marie had just mentioned. For me, I believe carriers and agencies will move from experimenting with AI to setting clear limits on its use. And then, of course, the Big I will continue to play a big role in assisting independent agents. For third-party funding litigation, carriers as well as states, I believe they will continue to push for tort reform. And then on the homeowner side, we recently, actually on December 8th, we had an article on AM Best raising the outlook for the homeowners insurance market to stable from negative, citing stronger catastrophe risk management, steadier reinsurance market conditions, and gradually improving pricing adequacy. This is a move in the right direction for this market. But nevertheless, I believe carriers are expected to continue to face market challenges in 2026, particularly when it comes to extreme weather events such as convective storms, and then as well as inflationary pressures.
Excellent. Well, thank you. I think for me, my prediction would just be, more mergers and acquisitions. Specifically, like we've seen in the past couple of weeks, large players in the broker space. As Amory mentioned at the beginning of the call, Willis Towers Watson acquired Newfront and Baldwin acquired CAC. Both deals were worth in excess of $1 billion. But we may see similar trends among carriers too. Regionals becoming super regionals and national carriers. Purely because scale does appear to be one of the ways that companies are going to remain profitable. But no, Amory, Olivia, thank you very much. And I think that sums up 2025 very nicely. So thank you. And before we go, I just want to say thank you to everyone that's read Independent Agent Magazine or has visited iamagazine.com this year. We have two weekly newsletters, Markets Pulse and News and Views, as well as a monthly print magazine that's also available in a digital edition. And all those things are available only to Big Eye members. But thank you for tuning in to this edition of Agency Nation Radio, powered by the Big Eye and Trusted Choice. If you've enjoyed today's podcast, make sure you hit that subscribe button and leave us a 5-star review. And if you have a story for Agency Nation Radio, contact us at hello@agencynationradio.com.